If you dollar cost average since the start of Bitcoin, you'd be up 10,000%. But there's a few of the guys in the office that have been seriously orange pilled.
Very bullish. Very
on the
bullish
Bitcoin.
around here, mate.
This is good.
Yeah. And so for the folks at home, orange pill means that you've fully swallowed the Bitcoin pill.
Any investment, whether it's crypto or housing or whatever, it takes conviction.
Yeah.
And conviction should come from education.
Get educated so you actually believe in the product yourself rather than your mate telling you this is a great investment.
The proportion of high net worth families that are into crypto is different from the rest of the world. They are embracing it. The best time to buy Bitcoin was 5 years ago. The second best time is today.
Right now.
Yeah.
Paul, CCO from Easy Crypto, thank you so much for joining us on the podcast.
Oh, well, thanks for having me, guys. Really looking forward to it.
No, mate, it's a real treat to have you on because you'd be aware as financial advisors, our industry has come from your standard assets. Your shares, obviously property for myself. So Rory and I are so excited because there's a few of the guys in the office that have been seriously orange pilled.
Very bullish. Very
on the
bullish
Bitcoin.
around here, mate.
This is good.
Yeah.
This is good.
And so for the folks at home, orange pill means that you've fully swallowed the Bitcoin pill. You believe in cryptocurrency and you want to have it part of your holdings. So that's what it means. But I want to tell a quick story because we've met once before.
Yes, we have.
It was at an event in November 2022, and it was with a group of people representing different asset classes. So you were there for crypto.
Mm-hmm.
We had a guy there for mortgages, like myself, property.
Yeah.
Then we had a guy there for precious metals, like gold. And then we had a guy there for shares.
Yep.
Each was talking about the challenges, each asset class was facing at the time. Because, to give some more context, it was a pretty turbulent time.
Yeah, I mean, we were just coming out of COVID and heading into in the recession.
Yeah.
It was pretty grim.
It was very grim, and we had the news was just not looking good.
No.
And so there was a lot of gloom and doom in the room.
Yeah,
The world was depressed.
Yeah, massive. It actually was. Yeah, and it's interesting because Darcy Ngara was there, and he was talking about how sort of the recessions he's been through, and how people, especially with property, they want to make people feel sick about property to sort of tame the market, which is the point that we were at with interest rates and all the negative things that were happening.
but out of that, you literally left your job and started a company.
Yeah, that's right.
That was the message for you.
Yeah.
I mean,
It couldn't get any worse than this. Was I'm already not making any money.
But kudos to you, right? I'm a huge proponent of people who are adding value to our economy and creating jobs and work, and it's really brave.
Oh, cheers, Paul.
So kudos to you for doing that.
Yeah.
Really, really impressed.
No, it's been an awesome journey, and Rory's taken the leap with me. And I think if you believe in something and you like you said, be brave and you put something out there, just like with your investing, over time, it's you can't fail.
Yeah,
pretty much. I want to talk about price charts and where things were at the time, because you might be a bit smug right now. You're sitting here when Bitcoin had gone on a massive dump. So we'll put the price charts up for people to see. But at the start of 22, we had a big pump. We had an all-time high there at the start of 22.
Yeah.
And then just the whole year was absolutely plummeting.
Grinding down, yeah.
absolutely
We call that crypto winter.
Yeah.
It's not the best time to be in the industry, but it's that natural reckoning where all the over leverage, all of the bad ideas just get crushed out, and we clean up. It's like spring, and then we come through. And ironically, it happens in a really predictable way in our industry, and so it's kind of almost pure capitalism in that way. There's no bailout. There's no I'm going to mint more money. It's just like grind it out. And you see businesses that didn't have their product market fit or their propositions or the ops model, they're just gone.
Just get smoked.
And just kind of gets cleaned out, and we start again and rejuvenate. And so it's painful, but ultimately pretty healthy for the sector. Is kind of how we think about it.
And if you've been doing it for a while, it probably becomes less painful. I'm now at a point where I'm like, bring on the next one,
Yeah.
Because we're at all-time highs, so the asset's expensive.
Correct.
I'm waiting for the next winter, and I wonder, no one knows if it's going to be the same as past cycles because of what's happening now, but I tell you what, if it drops significantly below $100,000 USD, I'll be very happy.
It's a great question whether this cycle, given all the institutional flows and now governments holding it on their balance sheet, will be different. So we just don't know the answer to that question. But traditionally, people who have been through some cycles kind of, start their their investment patterns, they kind of sell out at certain parts of the market and start buying back in at certain parts of the market, kind of classic Warren Buffett stuff, when there's blood in the streets, I'm buying. We have the analytics, the on-chain analytics to see wealth transfer in action. Like you do see people who are unsophisticated, who are emotional, selling when they shouldn't be selling and buying when they shouldn't be buying, and transferring value to people with a plan. If you've listened to most of my stuff, it is do your research, have a plan, and try and be disciplined about that stuff.
Yeah, absolutely.
The emotion of the market can wipe you out at the same time.
Yeah, for sure.
It's a maturity thing, I think. Like my guess is, and the theory would be that eventually there will be stability and you won't have the wild volatility.
Well, this will blow your heads off, but if you look at Bitcoin's volatility this year, well, it might have changed because of them ripping in the last week, but up until about 2 weeks ago, Bitcoin was less volatile than the S&P.
Wow.
Yeah.
So
over its
incredible life
this year.
Oh, just this year. Yeah,
right?
Incredible.
So, as you're saying, it's starting to happen in terms of the bands of its volatility are kind of compressing.
Yeah.
It's starting to kind of play out the way you're thinking about it, I guess.
Fantastic.
Incredible. I mean, looking at these charts, so I've got 5-year charts here, and we'll go through each asset class to see what's changed. Obviously, Bitcoin, I mean, you don't have to be checking the prices every day to know what's happened. It's in the news. We've had a massive pump. There's been huge developments, like you said.
Yeah.
Government adaptation, holding on the balance sheet. And so we've pumped. So, I mean, Easy Crypto is very happy about that. I'm very happy about that. Rory's a bit stoked, which is cool. We'll move on to the rest of them. So we've got the S&P 500. Like you said, a lot of volatility this year and more volatile than Bitcoin, but we've had some steady gains. So we did have that recovery you can expect from each market cycle, which is good. And then gold. I think, interestingly enough, gold has absolutely pumped. And you mentioned that it's got a lot to do with the big players like China and obviously Russia no longer holding US Treasury bills.
Yeah, look at it's if you discount kind of the last 18 months, because it's been going since 24, like gold was basically not even breaking even with inflation. Like it was probably a net investment.
Yeah.
Something changed, and the articles I'm reading are governments aren't buying US bonds.
Yeah,
anymore.
I think that's right.
And if you're sitting on the other side of a trade negotiation with Donald Trump, you're probably like, well, why would I keep buying your bonds when I can buy gold? And I think it's having a great year. Like it's up 40% or something like that, which really surprised me.
Yeah.
For a commodity like that. But
yeah, absolutely.
It's having its moment, and every asset kind of does.
Yeah. Because, you're right. It had since the 2000s, it had quite a sad little, existence.
Yeah. I've said on other podcasts, I didn't get gold bugs. You take out inflation, your real returns are quite small.
Really bad, yeah.
Except for the last 18 months.
Yeah, exactly. Yeah, now everyone's laughing. Yeah.
And that's kind of the purpose of it, essentially, isn't it? As a hedge against inflation. So if it holds its value, then it's kind of done its job. It was doing its job, but is it an investment? Yeah, No.
Yeah, so that was kind of my point. The risk return was pretty negligible, I guess.
Yeah.
Now, this is a very sad turn of the page for me, because I've got to turn to New Zealand property.
Okay.
So
here we go.
Very disappointing news. Obviously, as a mortgage advisor, deep in property myself, since we caught up in November 2022, we've had a drop of, I think it's about a 10% price drop there. This is average New Zealand house prices. And then it's been completely flat for the last 4 years. So out of all the assets that we actually talked about, property is the only one that's down even further.
Yeah.
Which is a very sad state for me, being a property investor and
it's
a mortgage
broker. It's
not
a bad curve, though, if you drew a straight line and ignore the big mountaintop there, just steadily gained in the last 5 years,
Yeah,
it's not
that's
bad
right.
for buyers.
Home
buyers.
If you look at 2020, 2019, we had all the gains up front, didn't we? And now we've gone flat. So instead of a straight line, we just experienced all the gains in that period. I think it goes to show, obviously as a property investor myself, mortgage broker, I definitely, I want Kiwis to strive for home ownership. I think it's really important to own the family home if you can. And if you've got the means to invest, I think that's really good as well, if you can invest in a second property. But I think, and why we want Paul on is because we're a big believer in diversifying. And at the end of the day, you've got the family home, but when you retire, you can't sell off a bedroom and live off that, right? You still got to live in the house. So we need other means of diversifying our investments to make sure that, we've got the means that we need when we retire. And that's why, these other assets, especially talking about, say, Bitcoin, is really, really important. And the one thing that, Paul, you mentioned at that chat, when it was really doom and gloom about crypto, you said, look, if you dollar cost average since the start of Bitcoin, you'd be up 10,000%.
Correct.
And, you just said, look, make it, 5 to 10% of your holdings and dollar cost average. And that's the same advice you've had through this whole run, which is just awesome to see, if that's the truth of it. It's
And the other part of that is, and I was talking to a guy last night at an event, do have a dollar cost averaging out plan as well.
Yeah.
So dollar cost average
nice.
and have a dollar cost averaging out plan, because trying to pick the market is just, I'm in the industry and I'm too busy to do that.
Yeah.
So do have a plan to make sure that you do have
to de-risk.
You do have that gain at the end of it.
Yeah.
Right? My advice is the same, and all the research is starting to show it's still the same.
Yeah.
Have a small portion of your portfolio in crypto class and hang on to it for a long time.
Yeah, absolutely. And because that's exactly what Jono Investment Advice talks about with dollar cost averaging out with your investments, because if you hit 65 and then your plan is to sell on that day, what if you're in a down market? You'll absolutely bug it.
Mm-hmm.
And all those projection calculators you look at actually aren't true. Because you've just missed out on all the average gains.
So what's the moral of the story of these graphs is that Bitcoin is the best performing asset.
Sell your properties and buy.
But
that seriously is it. Yeah, Bitcoin was the winner. And I just wanted to share that with Paul because I remember meeting him on the day and it was really like negative news about crypto. And it's played out exactly like you said. It is the purest form of capitalism because there is no fakeness or government intervention or things that you get in our modern, like massive bailouts or, fake stimulation. It's the purest form of cyclical, capitalism.
And I don't want to believe the stuff I read all the time, but that's kind of what happens in our industry. And I guess the other thing, reflecting back on that, is that it's just a time horizon.
That's right.
Like we were in a point in the cycle, and housing is in a point in the cycle. And if you invest on enough of a horizon and good quality assets, then, and that's the point.
Yeah.
Trying to be a day trader, you're going to get sliced up.
Yeah,
it's not fun.
Yeah. You're speaking from experience? Or?
Hey. my wife might hear this. Again, if you're an investor, not a trader, you have a horizon that sees past cycles like this.
Absolutely.
Because in any sector, you will have it.
Yeah.
And they just run on different timetables. One of the traders I love watching online used to work for me. Occasionally he'll put up the gold chart. And the gold chart is like the Bitcoin chart. It's just hundreds of years old.
Yeah.
So it's just compressing timeframes.
True.
And S&P is a lot faster than gold and crypto is a lot faster than S&P. So it just, that's kind of the cycles that we're in. And so just understand what your industry is that you're investing in and what its cycles are, and have a plan that goes beyond those cycles, because you're going to have gains and pains, and you got to ride both.
Absolutely.
Yeah, and don't worry about being late. Like you might look at charts now and S&P and Bitcoin and close to all-time highs.
Yeah,
just start and get involved. I asked ChatGPT what were the earliest prices of Bitcoin, and it told me
12 cents.
Yeah, actually less than that. It said there were early. And it could be wrong, right? 2,300 Bitcoin for a USD. And then they went to an exchange at like 0.0033 cents.
Right, yeah.
But it was nothing then, right?
It was almost a gimmick, right?
The tech was there, but it was the adoption's the key.
And it needed network effect and, as you say, adoption, and it needed a whole bunch of things to wrap around it to get to where it's gotten to.
Yeah.
And, I'm personally in awe of the people who were in it so early because they made it what it is today with a whole bunch of belief. And, when everybody is screaming at you, it's a con, it's a scam, it's a whatever, and they've just held on and
just the vision, eh?
Yeah, exactly, right? Yeah. For some people, it's really affirming that the more people that say it's bad and they're like, no, it's actually, that says to me, the people who are saying that to me are the ones I think got it wrong.
Yeah.
So, and they stayed with it, which is awesome.
Yeah.
It's still polarizing. There's still some credible people calling Bitcoin a Ponzi scheme and all sorts of other things, and it's going to go to zero eventually. Can we just kind of ignore that for a second? But because that's out there, can you kind of just give us what is Bitcoin? Like, what's the purpose of Bitcoin? What does it do?
Well, it kind of evolves, and it's different for different people. So It did start out as a money transfer service. That was the original white paper, said that, but it was a generation 1 technology. So it hasn't really materialized as a widely adopted payment tech. Some people will do that, but it, in terms of widely adopted, if you compare payments like Visa or Stripe, it's not there. For other people, it's a store of value. We live in a country that with political stability, despite what you see in the media, stable banking, we know that if we have $100 in the bank, we can turn up just about any time we're going to get it back. If you live in Turkey, Argentina, that is not the case.
Yeah.
But people don't put their money in the banks, and their value of their local currency is deflating away so quickly. Bitcoin is a better store of value for them. So it's a different use case. And, stable coins are also playing a role in that. And there are people who do treat it as an investment class. Like it is just a thing that
An appreciating asset, yeah.
I can see that it's a long-term channel that's going up and to the right, which is a great news story for an investor. And yes, it will have volatile moments, but it's still going on the trajectory I want. It has numerous kind of use cases. It's as material as the S&P 500. The S&P 500 is an index which is constructed of, value numbers of 500 companies underneath. It's, what is it?
Yeah.
It's a number. And ultimately, Bitcoin is, a cryptographic number in that regard. So it functions a lot like a share in equity in that regard.
There's multiple use cases, and you can obviously use it as a means of exchange.
Yeah.
And that, like as you said, that was its original use case.
Yeah.
It seems to be morphing more into that store of value, that principally, and there's perhaps other cryptocurrencies that are going to pop out and do that job.
Yeah, and look, it often gets compared to gold, and really interesting when analysis I read just last week when, a lot of the Trump tariff turmoil was coming in. Bitcoin kind of half responded like a share and half responded like a store of value. And that just says to me that people believe in it in different things. Like they're believing it's a different thing. And that's cool. Like it's completely cool that they're doing that. But it's gold-like, but not gold. It's share-like, but not shares. It's a slightly different thing in its own right. And, my former employer often talked about crypto as its own asset class because it's got attributes of this.
It's like a hybrid.
Yeah, it is. And so I think that's kind of coming out to play. So it's an interesting, fascinating thing when you look at it and compare it. Sometimes it's correlated, sometimes it's decorrelated, but in general, it's not particularly correlated with equities and shares and stuff like that. So it just does its own thing. I think, back to your other bit, that's kind of what upsets people because it's like, how do I categorize this?
Yeah.
Does it fit my mental model? Who's the issuer is a classic question.
It's
like,
who is Satoshi?
Who is we'll get to that, I'm sure.
Is he Elon Musk?
So it doesn't fit the established mental model for a lot of people and a lot of things, but that's part of the challenge of it as well.
100%.
Yeah. I think it's FUD that it's going to zero. And someone made a point recently I listened to was that there's never in history been something with a market cap of $2 trillion, which I think Bitcoin's surpassed that by a fair bit now, that's gone to zero.
Yeah.
If we were talking like hundreds of billions, that's happened. But in the 2 trillions, that doesn't disappear. So if it did, it would be the first time in history. So it seems that argument's kind of losing a bit of traction.
I agree. Like there are, I don't know if they're still doing it, but there were people who were literally plotting on the Bitcoin price, the amount of times it's been called, it's going to go to zero. And it's just,
it's forever.
Yeah. In the early days, it possibly could have, but it didn't, and it hasn't. And as you say, it's an economy that's bigger than many nations now. Like it's a big asset. It's bigger than Google. It's bigger than silver.
It's here to stay. That's great.
Classic opinion.
Yeah. Awesome, Paul. We were just talking before a bit about how the government and the IRD specifically are reacting to this wave, right? So we're keen to get your thoughts. Obviously, not going to put you in any hot water, but we just want to know, like, do you see it moving in the right direction? Do you see things with crypto going well? Because my opinion on the tax laws, compared to other asset classes, I've written the word draconian here. So we just
you set
the tone.
That's a buzzword and a half, mate.
Set the tone because I've recently sold some Bitcoin to invest into a property, bought a new family home. As I was, as that was happening, it wasn't a big amount, but I just thought, the tax that's eligible on this, for all of the pain I had to go through, you know what I mean, compared to another asset class, like if I had sold shares, was pretty crazy. I was being taxed on my income tax, and I know that's different in other countries, especially Europe. They look at it a lot differently. But I mean, what are your thoughts? Like, do you see things developing in that space, not just tax, but overall government view?
So the way I look at it is, if you look at what President Trump's done and the leadership that's now coming out of the US compared to last year, I think that will force governments to rethink this at a regulatory level. I should preface that with saying that the regulators in New Zealand are incredible. I met two of them last night in the event.
Right, cool.
The access we have in New Zealand is incredible. And
so we're in good safe hands.
The ability to get in and speak to them is unprecedented. You just don't get that in other markets. And in my experience, they've always been willing to engage, really open to learning. They have rules and all that sort of stuff that they have to adhere to. I think we are a little bit laissez-faire, I guess, in terms of what other markets are. And what I mean by that is, got some guidance. Sometimes we could do with some hard rules. There are countries who are, gone deep down a taxonomy. So, different coins do different things and are treated different ways.
Oh, wow.
We're not there.
Yeah.
And I think we probably would benefit as a sector from being there. There is some work going on in a few of the departments around some of the emerging technologies. So tokenization, which is how you take a real world asset like a house, and fractionalize it and have, investors in that, whether it's commercial property, gold,
oh, incredible.
whatever.
Yeah.
So that's a really big topic inside of crypto, and it's starting to be an emerging topic inside of the regulators.
Yeah.
Because it looks a lot like a financial product, and it should be.
Yeah.
They are certainly engaging in that. And we as a business have always tried to be acting like it's a regulated product. We're on the FSPR, but we're licensed, but we're not regulated, and there's a distinction there. So we think it's good for the industry. It'll give, investors certainty and all of the stuff that comes with it. We're also saying that along the way, why don't you fix up a few things like our custodial laws that are just, at odds with other nations and things like that as well.
Yeah.
In terms of tax, that's a really hard one. Having looked at the stuff globally, it's clear that some nations view tax as a strategic tool.
Yeah.
And are open to using tax to attract talent, wealth into their nations. Portugal's a classic example. New Zealand doesn't seem to be on that bandwagon, and I think that's possibly a missed opportunity.
Yeah.
We've got golden visas, but that's not a tax incentive. It's like a come in and invest thing.
True.
I do think that's possibly an area where, if it lined up with where a visionary government wanted to be, it could really be a good lever.
Yeah.
I think having tax that treats this asset class the same as other asset classes would possibly be a good outcome.
Yeah, I agree.
Reduce complexity and help understanding and all that sort of stuff. We've got a guy called Tim Doyle who looks after us as a company, but he also runs a business just helping crypto owners understand their tax. Because it's complicated.
Yeah, it is very complicated.
And he's doing a stellar job of educating the market on that, but it's hard.
Yeah.
And it's possibly too hard, I guess is the question, is the challenge.
No, it is really hard to do yourself because, like you mentioned, if you're dollar cost averaging into an asset, you would have to, just calculate your profit or the taxable, amount on that. You'd have to go back each point, the amount.
Records on every transaction.
Yeah, it's a quite a big, hefty obligation.
Yeah, and look, there are softwares out there that can do that, and they can track your wallets and give you decent reports. Some of those are better than others.
Yeah.
I think Inland Revenue will be clear that you can't rely on that stuff as well.
Yeah, exactly.
But again, it's just hard.
Yeah.
And I don't think it has to be.
Yeah, I agree. Yep. And it might actually be a good thing for now because people are more reluctant to sell. So it's good for the price.
Yeah. It's good to see there's adoption, though. There's obviously some, regulations around what's happening in KiwiSaver and Cora, allowing holdings. There's a way you can get a 100% holding as well in KiwiSaver with a minimum balance of 50,000, which I can't recall the name of that one. But do you see more of that happening in the KiwiSaver space? And what are your actual thoughts on ETFs and things? Because it kind of breaks some of the principles of self-custody and not your keys, not your crypto. Yeah.
My personal view is, if you come back to where I was talking about, if you can have some crypto in your portfolio, it's a great thing. So I'm really, really stoked that Rupert's been brave enough to do it. He was the first one, I believe. There are others out there where you can, they have some exposure to crypto now. And so as an asset class, like I said, it's got a good Sharpe ratio, which means risk return is good. It's semi-correlated to decorrelated. So when other markets yang, it doesn't yang. It's a good thing to have in your portfolio, and you can just get outsized returns. And little insight, we're about to release a paper that looks at what ultra high net worth families are doing. The key difference between them and everyone else is one, time horizons. They think intergenerational wealth. That's how long they think about it, which is, get your head around that.
Yeah.
And two, their allocation to alternative assets is quite high versus the rest of the market. So alternative assets are things like private equity. So they're, investing in companies, and those are big checks, but they're investing in gold and they're investing in crypto in relatively high numbers. Still in the 10% range.
Yeah.
But they're into it. And when I say high numbers, like the proportion of high net worth families that are into crypto is different from the rest of the world.
Yeah.
They are embracing it at a level that's higher than the rest of the world. That tells you something.
Yeah.
Back to wealth generation, which is kind of what KiwiSaver is about. It's about, us generating wealth so we can live happily in our retirement. Like, I think it's a great thing to have. In terms of a portfolio. Again, though, you've got to be responsible about it. If you're bullish enough on crypto to go 100%, you can do it through us, right? You can have an entire portfolio and self-custody it in a wallet, or however you want to do it. My view on ETFs, I think it's opened the asset class up to a bunch of people who are never going to buy it. The complexity of a wallet or signing up to an exchange, and they just weren't going to do it.
Yeah.
Is it an artificial wrapper? Yes. Do the purists hate it? Yes. But,
it's good. It's good for everybody overall.
In the last two weeks, I think they've taken $8 billion. Like $8 billion of Bitcoin has been taken out of the market just on the ETFs.
For the ETFs, yeah.
For the ETFs. Like it's helping the native holders in a price mechanism.
Yeah.
Back to favorable tax. There is a point in time on the fifth rules where it works, and then there's a point where it won't work, because if you get beyond the 50K threshold, you need some serious tax advice.
True, exactly. Yeah.
I think at a net level, it's just another way of getting exposure to it. I'm kind of pragmatic about that stuff. I know there's purists out there that hate it, and good on them. They're the ones who got us to where we've gotten to. But I just think if you can just sit back and say, is the next 50 million people coming into crypto going to get exposure via an ETF? Does that upset you? You might not think about it the way they are, I guess.
Yeah, that's right. And there's just a large portion of the market that's how they invest.
Yeah. And it's the thing that I wish they understood more is it means if you're the Canadian pension fund, one of the biggest funds in the world, or the Norway pension fund, they have rules, and buying Bitcoin isn't on the rules. Buying ETFs is on the rules.
True.
So suddenly a whole bunch of investors who were kind of shoehorned out of it are now eligible to it. And so that's a good thing. And then if you look at, say, Microsoft strategy company that's about to go into the S&P 500. So you're going to have exposure to crypto anyway if you have an S&P 500.
Yeah.
Coinbase is already in there. Right? You've got some exposure to crypto already. It might be negligible, but you're getting there. And there'll be more and more companies like that. There will be.
They just have it on their balance sheet.
Or have they're just becoming Circle, which is a stablecoin provider. Like, they're going gangbusters. There's a good chance they're going to make it into the S&P 500 as well. So more and more crypto companies will start getting in there anyway. So, even those index funds, you're getting a slight exposure to.
Yeah, I didn't even think about that.
Strategies are sort of a wild Bitcoin success story, eh? And they are going into the S&P, eh? I read that they just had to have a couple of quarters of profitability, which based on their balance sheet should be happening or has happened.
But it's a fantastic business model. So, if you don't know them, they were a software developer. They went, AI's coming, we're probably going to lose that game. But they had a few $1 billion on their balance sheet, and they started buying Bitcoin, and then they started issuing debt.
Yeah.
To buy more Bitcoin, and he's just been doing that. And
debt and stock.
Right?
Yeah.
It's still fairly experimental. We should be very candid about that.
It's a high-risk strategy. Yeah. To say the least.
But they are now one of the biggest Bitcoin holders on the planet, those guys. And,
about 3%, I think.
Yeah. It's significant, but their performance has been rewarded.
It's cool. Yeah. And just hopefully they're set up for the next potential winter, if there is one. You know, they've got the right safety mechanisms in place.
That's the biggest question.
Can we stay liquid? Yeah.
What happens when price goes down?
Yeah.
I want to know who's going to move in New Zealand, what public companies are going to bring this into Treasury, you know, because Strategy was the first, MicroStrategy, when they started it.
Yeah.
And now, you know, over 100 companies in the US and around the world. I think a couple in Australia.
Yeah.
That I researched.
I don't know about the big companies that are talking about, like I really don't, but I do know that some small businesses have been doing it in New Zealand for years. You know, I was fortunate enough to talk to a client of ours who was in a really hands-on industry, like painting and, you know, that sort of stuff, been accepting Bitcoin as payment since 2013.
Wow.
Brilliant.
And, you know, I don't know if he or she has been hanging on to it, but it's like, pretty cool.
If you were.
Yeah. Absolutely.
So in a way, I think there are companies out there, well, I know there are companies out there that have been doing that. And so in a way, they've been doing the sales strategy for a while.
That's incredible.
Almost like the retail market, which is the backbone, eh?
Yeah.
So it's, interesting.
I want to take a second, Paul, to talk about like self-custody and how you see that evolving over time. Because for me, you know, as a smaller portion of my portfolio holder, that's always a big concern of mine, you know, of how to actually self-custody safely and what is the best method. So I got given a Trezor wallet from by my friend about 5 years ago.
Yeah.
Just used that since it's worked just fine.
Yeah. So look, if hardware wallets, which is what Trezor is, a more secure cold store wallet than a hot wallet. So hot wallets are always kind of online. So think of the apps on your phone. They're always online, and that just carries with it a little bit more risk.
Because you could be hacked.
You could be hacked. Someone could take over your phone with a screen share, get your passwords. Like, it's possible.
Yeah.
Whereas these encrypted devices, they're offline. You only put them, they only liven up when you plug them into your computer or however you're doing it.
Yeah.
And they do the cryptography there. So self-custodial does come with responsibility.
Absolutely.
Great power, great responsibility.
Yeah.
And
okay, Uncle Ben.
Yeah. So, you know, you do need to have a think about your processes and how you store your seed phrase, the passwords, all that sort of stuff. And, you know, again, if you're thinking intergenerationally, there's quite a bit of thought that needs to go into that.
That's right. Yeah. What if something happens to you?
Correct. How do you recover that? And you know, there are some good advice online on how to do that in terms of, you know, you can take, you got a 24 seed phrase ones, you get 6 to this friend, 6 to that friend. You don't tell them, obviously.
Yeah.
You know, or you can use wills and trusts and all that sort of stuff.
Yeah.
There's an interesting company in New Zealand called Everlasting Liquidity who are working on estate planning for people. So how you can, you know, when you unfortunately part ways with the world, how you can pass your crypto wealth on. And so it's an active area that a lot of people are working on.
That's really cool.
And, you know, part of the answer sometimes is this thing called a multi-sig wallet. So that's having multiple people being able to sign a wallet.
Yep.
And you need, say, 2 or 2 or 3 to be able to sign it. And one can be your lawyer, one can be an independent trustee, and one can be you or a family member or whatever it is. And so it's just another way of kind of reconstructing that password, so that you know, should something happen to you, you can, your family can benefit from your toil, basically.
Absolutely. And why, like, for that obligation? Obviously, you've got your hot wallets, like you said, but are we going to see, you know, any other third-party custodians come into the market? Is that something you guys are going to do potentially, or?
Yeah, look, so. In April, we got acquired by an Australian company called SwiftX.
That's right. Yeah.
And they operate a custodial model.
Oh, brilliant. Yeah.
And so.
And that's an offline one, or just a.
No, so
they
are a custodian.
Cool.
When you trade on their platform, they're holding the asset for you.
Yeah.
I think in the early days of crypto, that was a high risk strategy.
Yeah. But on the wallet, on the exchange.
Yeah. But the hacks don't happen at anywhere near the frequency that it used to have. So that custodial model is becoming a much more acceptable way of doing it. And you know, businesses are getting better at it and all that sort of stuff. So I think over time, the balance between security and ease of use will skew towards probably ease of use. Yeah. Because the user experience is still, I would argue, the hardest part of crypto. Like, what is this what is this seed phrase? And, do I need to keep it? Well, yes, you need to keep it.
Yeah, just the fear, right?
Yeah.
I mean, there's a lot of fear behind, if something happens, that's my whole, good chunk of my net worth gone.
Correct.
Versus, you just feel like obviously it's as safe as it can be, but with your main banks, just storing your cash there, you don't have to worry about it.
Correct. And so, that stuff's evolved incredibly in the last 3 to 5 years. And yes, there are still hacks, but they're just like bank hacks. Like it's social engineering. They're not breaking the software. It's
give me your password.
Well, people are being fooled through, LinkedIn ads or whatever it is that's going on. And that's no different from banking, right?
Yeah.
It's an important conversation. Like I'm sort of newly into Bitcoin. So I've just moved my KiwiSaver to Chorus. I've got my 10% allocation.
We're pretty stoked.
And, and I've got a ledger and it's, we're talking about security. It's sitting in my laptop bag. There's not a lot of crypto on it. It's still on the box and the seed phrase is in the box. I don't know what to
You're
do,
waiting to be robbed.
Well, if anybody tries to pull me up after this, I can defend myself. It's important, eh? And as you start building it and it becomes a bigger allocation, regardless of the allocation, you don't want to lose this stuff.
You need to think about that stuff and separate the device and the PIN phrases from the seed phrases. And
it can't even be under the same roof. I was thinking about a fire.
Fire is a big risk.
Yeah. So sadly, this is a problem that has come up a lot and has been thought about, but you can get, I don't know what the name of it, but you can get these steel things.
Those little canister things.
Or you can get canisters or steel things that are etched with the seed phrase. So it can survive a fire, and they've tested it, and
bury that 6 feet deep.
Basically. And then, there are people who use private boxes, one of those safe deposit boxes, they put the seed phrase in a vault effectively to do that. But again, if you've got a few $100s, not really a problem. But if you've got a few million, you need to think about that stuff. And only you can, the answer for me is how much could you live with yourself losing?
Yeah.
And if you get to that point, you probably need to have a plan around how you store that stuff.
100%.
And again, we live in a world of AI where you just AI, give me a plan.
True.
And it will be able to do that for you. Personal security and how you store that stuff is a big part of what you need to do.
Yeah. I'll take that advice.
David, our one of our financial advisors, we call him a bit of a doomsday investor.
Oh, good.
And he bought a bunch of silver about 5 years ago and he buried it. Just cracked me up thinking about him digging a big hole, you know what I mean?
I love that idea, fit into generational and bury your seed phrase in a little treasure map.
Yeah.
Wouldn't that be exciting?
Yeah, there are people who've done that. It's a thing.
Yeah.
Paul, I think one important thing I want to talk about before we shut off is, touching back to when we first met and our obligation as financial advisors. This is more about education, right, than pushing a product. And Easy Crypto is really big on that. You guys have got a platform where you educate and you let people do their own research before they actually buy something. Yeah. So, it's good to make a disclaimer here and a message to all our listeners or our clients or potential referral partners. It's all about doing your own research because that's what's going to help you, give you the confidence to hold long term. You know what I mean? Get educated so you actually believe in the product yourself rather than your mate telling you this is a great investment. You know what I mean?
Look, that's a great way of saying it. Like any investment, whether it's crypto or housing or whatever, it takes conviction.
Yeah.
And conviction should come from education. So,
100%.
So do research it up on Easy Crypto. We've got a place called the hub.easycrypto.com.
Yeah.
Which is kind of a knowledge base for, what are wallets, how to do that, what's Bitcoin.
FAQs.
Basically, as much as we can, in a fast evolving space, document, we do that.
Yeah.
Because we want our customers to be informed. And, it's not without risk. If you bought a house at the peak of 2021, you're probably a little upset now.
Yeah, but gutted,
Similarly, if, park in the last sort of 6 months, if you bought Bitcoin in the same time, you're probably a bit upset.
Yeah.
So do your own research, invest wisely, invest what you can.
Yeah.
And again, just have a plan. And that's, for me, the one thing I would really wish New Zealand's financial literacy was better around, just having a bit of a plan around this stuff.
Yeah.
And I'd love it to be crypto, but please don't. It's not an exclusive thing.
And anything.
Don't sit in default KiwiSavers.
Yeah.
Don't, do some research. You have to be, as a nation, we're a little bit passive around some of that stuff, I think. We just need to be a little bit more active.
Yeah.
Do a little bit of the legwork. And it's harder, but staying poor is really hard.
Yeah. It's way hard.
I'm a father. I want this nation to be successful for my kids' sake.
Yeah.
And so this is the kind of stuff it's going to take.
Yeah.
So.
I remember us catching up how you were just getting I think it was your son into crypto.
Yeah.
Oh, yeah.
He did pretty well.
Yeah, awesome.
Yeah.
Is he still,
No, he did sell out because he's going to university. So he sold his bits and
he's investing in his education.
Someone's investing in his So, but that was part of it. And he'd done some research and, he chose his coin and, it was a big part of it. That's fantastic that, I think he was 17 at
he's
the time.
Experienced that now.
Yeah. And so for him, he's already kind of made the first leap and, the barrier to doing it again won't be as high.
Exactly.
And, if the first time you do anything, whether it's buy an equity or buy a crypto or whatever, it's always a little bit freaky. And then once you get comfortable with it, be responsible. You can buy for $50 on our platform.
Yeah, it's not a high barrier to entry,
right.
Is it?
Yeah. It's not like him. You don't need thousands, and you still get the same gains, right? If Bitcoin goes up 10%, your $50 goes up 10%.
You experience that.
So start is I guess that's the one thing. And I know as financial advisors, you guys are doing this as well because it's fantastic. People reach out to you, but you got to start.
Yeah, exactly.
And so just start, do your research. Have a plan both in and out of the markets and have a horizon that's appropriate.
Yeah.
And, the lessons from the ultra rich are really clear. The lessons from the analysis are really clear. If you've got enough horizons under your belt, you're going to do well as long as you're buying quality assets.
Absolutely.
Yeah. And, take it from there.
Awesome.
And horizons are really cool. If you believe in the Bitcoin, $1 million a coin.
Oh, Michael Saylor?
You might have sailed more than that even on some talks.
Yeah.
Then although the market looks like an all-time high right now, you're actually buying at the bottom. If you can actually
and
imagine what's going to happen over time, and if you believe in that concept, then you are buying at the bottom today.
Yeah,
correct. And it's a really flippant statement, but in crypto, and I'm sure it applies to other assets. The best time to buy Bitcoin was 5 years ago. The second best time is today,
right now.
Yeah.
Because again, it's in a channel that consistently keeps moving in one way. Over enough time, and that's the bit that as someone who's an investor, that's the bit that matters to me. And so, will it duck and weave? Yes, it will. But that's part of it.
Expand that horizon.
Volatility is actually a good thing because it means the asset is moving.
Yeah.
And
it's got scope to go up and down.
That's
right?
correct.
Yeah.
Correct. As an investor, you don't want an involatile asset because it's not keeping up with inflation. It's stagnant. Our psyche in New Zealand's a little bit scarred. I think 1987 was probably a defining moment in terms of New Zealand investment history.
Yeah.
A lot of people got wiped out and all of those shares and equities and all that sort of stuff.
Yeah.
My mum was exactly the same. She's like, I'm never touching that stuff again.
Yeah. Just property.
Right.
Yeah.
And good for people like you.
Yeah. But times are changing now. Times are changing.
Well, but again, like as a psyche, I just think we as a nation need to be better educated around investing. If you go to places like Singapore, the US, that's what they talk about.
Yeah.
And we don't. It's really noticeable. And so having people become more aware of what the opportunities are, alternate assets, how they can do it, funds, even housing funds, right? They get exposure to a sector.
Yeah.
So I think that's part of what we do on a daily basis and just try and make people aware of the opportunities that exist.
Yeah. Awesome. Well,
Brilliant.
Paul, thank you so much for your time, mate. Your insights have been just really terrific, and we look forward to hopefully having you on maybe next year and the year after that and just do an annual review, and just see how the business is tracking. Yeah. Pull up the receipts. Yeah. Thanks again, Paul. Really appreciate it.
All right. Thank you for having me on.
Cheers, mate.
Cheers,
Paul.
Yeah.
Appreciate it, mate.
Thank you.